JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of February 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But as always guys, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, the first one I'm going to pick up here is Nikkei 225. So quick update on what I was talking about yesterday. And yesterday I said, guys, keep your eyes on this 30,297 territory, which in a way, if we see the index closing below it, then maybe we could go for a bit of a corrective move lower. So this little drop here, of course, came after the US equities drifted south yesterday. So we saw a bit of weakness, so a little correction lower here. Everything seems to be quite healthy with that. So so yeah, if we see another drop here below this 30,297 territory, then yes, I'll go for that slightly larger correction to the downside. Then I'll aim for that 29,519 zone, which is the lowest point of May of 1990, or we could go towards the 21-day EMA. But again, we'll pick up on that later. For now, basically all eyes are on this 30,297. That's the lowest point of July. Actually, let me just quickly, that's July or August. I keep forgetting which one of these it is. So this one, so yes, that's the highest point of August of 1990 is around the 31,371 zone. The lowest point of July is at where we are sitting right now. So in other words, guys, for now, long story short, basically keep your eyes on this. If we continue to trade above it, then maybe, yep, there is a good chance we could see a nice rebound and a push back to the upside. Jumping into the German index DAX, and also drifted a little bit to the downside. So the index kind of remained below that all-time high, which is around the 14,169. It also remained above the highest point of January, so which is around the 14,131. And if we take a look at the cash index right now, we'll see that the price is trading around 14,061 zones. So basically just around, not far from where it closed yesterday. So I'm going to keep an eye on this one. If we get a drop below this this level right here, the 14,063 territory, I mean, we're currently kind of balancing around it, but if we get a move, a further move below this, then yes, my next target of course is the 21-day EMA, and then we'll take it from there, because I want to see if this 21-day EMA will provide decent support or not. Now, jumping into the FTSE 100 here, the index, after finding good resistance here near the high of the 15th of January, the index kind of drifted lower yesterday. It closed fractionally in the red. However, if we take a look at the cash index right now, we'll see that the price is around 6,765 territory, so above yesterday's close, but still below this little hurdle, the highs of 19th and 21st of January. So in order to go for some higher levels, well, of course we need to see a break of this one, the first one, the 6,771 territory. And then maybe, well, not maybe, but for sure, push above the 6,802 zone here could do the trick for more buyers, because this would confirm a forthcoming higher high, and potentially could invite more bulls into the field here. So, and then the next target could be this 6,903, 4, approximately around there, guys. That's the highest point of January. Given that we already had a decent up move here, and another thing, of course, let's see if this is not going to work out as a potential kind of shooting star, or kind of a doji here. So, and if so that it wouldn't kind of be seen as a potential reversal signal. However, as I said, if we get a pop above the this 6,802 zone, then higher levels could be met. For the downside, from the very short-term perspective, of course, keep your eyes on yesterday's low, which is roughly around the 6,737 territory, so 67.37. Here, keep your eyes on that hurdle. A drop below it may open the door towards a bit of a larger correction to the downside. Now jumping into another index, and this one is a dollar index, and as always, guys, the index here, I mean, well, it's always, as always, it is a tricky one. So it continues to oscillate around its 21-day EMA. So that's, we can see that's a fact, that's for sure. This one's showing 21-day EMA is shown as a yellow line here. So yesterday the index drifted below this 90.25 territory. I spoke about this one, but what I said as well, that in order to get a little bit more comfortable with let's say with the lower areas here, I would like to see that daily candle staying below it, but we never stayed below it, and instead it kind of pushed heavily, or not, I wouldn't say heavily, but decently to the upside here. Today we're seeing the index trading above the 21-day EMA. However, I'll still remain careful with this one, because as I mentioned to you before, that for me to consider maybe the upside here, I would prefer to get a push above the 91.24 territory first, and then kind of go for some higher levels. For the downside, still the same game plan remains. I need to see a drop below this 90.25 zone. Quick update on gold. Gold is continues to drift lower, and to be honest, it kind of managed to reach my target. So my target was around the 1785 territory, although we just fell shy by just a few points, or actually 1 point here, roughly around there, in order to hit that area. But to be honest, I'll take that. It's a good result. So now the big question here is, can we move further? So in order to be on the safe side, guys, you could wait for a drop below this 1785 territory. And yep, and then we could go for that lowest point of November here near the 1765 territory, and then we'll take it from there. If by any chance this area here, the 1785, continues to provide support, we might see a bit of a rebound here, or maybe a move back towards this 200-day EMA. And then we would take it from there. But still, the upside scenario for me, for now, at this point in time, could come only on a break of the downside line and a push above the 1855 territory. Brent oil. So this one's a tricky one. I mean, yesterday it declined. I mean, it showed willingness to move lower. However, as you can see, I've mentioned this yesterday, that this 62.81 zone, that's what I was keeping an eye on. And look how perfectly this area did kind of let's say provide support. You can see that yes, the commodity is trying to make its way higher right now, this to push above the 63.74 zone. Well, I mean, to be honest, let's not rush into anything yet, guys. For now, let's keep an eye on that barrier, and if we do get a pop above it, of course, yes, this could open the door towards higher levels, and in that case, I mean, I would have to start. Well, I'll have to start looking for another potential area of resistance. So one of which could be this high of the 20th of January here near the 65.98 zone, or if you want to round it up here a little bit, so the 66 territory. So keep your eyes on that barrier, of course, but again, I'll aim for it if we get a push above this little hurdle, the 63.74 zone. If we see the daily candle stay above it as well, then yes, that could even increase the commodities' chances of drifting further north. Now jumping into Bitcoin. So Bitcoin coin, yesterday it kind of let's put it this way, it moved nicely above that psychological 50,000 zone. It hit a new all-time high yesterday, the 50,490, and today we have hit a new all-time high, and that's roughly around the 51,000, guys. So however, looking at this picture right now, of course we can see that it's currently getting a hold up near this previous all-time high, this 50,490 territory. Now this is where it's going to be very, very interesting, because if this area somehow continues to provide resistance, well, maybe we could go in for a bit of a corrective move here to the downside. So we can see that for example, we know that Ethereum is not really, let's say is performing that well. It's not really going for those all-time highs. Here, for example, from the technical side, we can also draw a potential rising channel pattern here on this crypto. It's not an ideal one, of course, because there is a bit of a kind of squeeze happening. I would say it's not really that parallel lines, but depending on how you're going to draw it, I mean, of course, we can interpret it as much as we want. But in other words, if for example, let's say we're not gonna, if going just purely from the technical side, if this is not going to be seen as a potential kind of rising channel, then, well, given the fact that the lines are not really that parallel, maybe this could be forming a possible rising veg pattern. Now, in those patterns, of course, as you are aware, those patterns tend to break to the downside. So again, that's a technical rule, and we have seen that happening several times. So yep, keep that in mind as well. Now, in terms of the next kind of high here, well, the only problem here, guys, is, and by the way, Klaus, I thank you for the question. So in terms of the 52,000, well, I mean, again, everything's possible, could be. The only thing is that nothing is for sure here, especially when you are in uncharted territories. And well, I mean, if we see a pop above the 51,000 mark, then yes, of course, the path towards the 52,000 is opened, and I mean, it could go and then hit that as well, because for example, when we were still here in the beginning of February here, when we were hitting these levels around the 48,000 territory, I mean, yes, people were speculating that, oh, the next level it could be the 50,000, maybe this is where I'm going to start, you know, entering my shorts and stuff. But I mean, it continued to rally, and it hit the 51,000 as well. So now the only thing what we can do here is basically when we are at these levels, when we are hitting these new all-time highs, we can just go from the previous high basically. So currently, like I said, keep your eyes on that 51,000 mark. If we get a pop above it, this will confirm a forthcoming higher high, and more buyers could join in, of course. And then yep, we could go slowly towards that 52,000 territory. But again, looking at this little technical picture here, I mean, from the very short-term perspective, yes, I mean, overall we are still trading above some of these upside lines. But if this will end up being a potential rising veg pattern, then, well, I mean, we could be seeing maybe a break lower later on. And by the way, jumping into a monthly chart, look at this. I mean, January was spectacular, but February, I mean, look at this beautiful move, the steep move, and the steepness of this kind of this chart. And again, I mean, we had let's say a huge moment here back in 2017 and 18, but this of course outperformed this very well. I mean, also thank you very much to Elon Musk. But guys, I mean, at the moment, yes, the monthly candle looks like this. I mean, look at this spectacular move here. Not only that we overcame the January high and kind of actually went for almost the same amount, actually, where we've managed to, if we measure it this way here, we've managed to do the same amount from the beginning of February to the high of January, and we managed to do the same kind of distance on top of that if we take it from the January high. So basically, I mean, this is just, I mean, amazing, I would say. But of course, as you are all aware, the bigger the move, the harder the fall. So again, at some point this will reverse at least a little bit to the downside. But again, of course, we didn't have our reversal signal yet, so that's why, I mean, what I'm gonna do here is I'm gonna stick to this idea that if we get a pop above that 51,000 zone, then yes, I'll go for some higher levels. But if it struggles to do so, then, well, I mean, we could be maybe seeing a move back down. So in terms of the downside, what you could do here is maybe keep your eyes on the current low of today, and that's roughly around the 49,000. Let me just double check. Yeah, that's 49,000. Actually, bang on, if only 49,000. There we go. So a drop below the 49,000 territory. And then, yep, I mean, a drop below this hurdle, then yes, lower levels could be met. I can see your question in the chat, Klaus. What should you Twitter to let it move? Well, I don't know. I mean, that's of course crazy what's happening recently, but yeah, I mean, whatever you feel like, whatever you feel, you can Twitter that out. Maybe it'll pick up by someone, but again, it's a crazy period, an interesting period that we were living through. So yeah, now jumping into AUD NZD, guys. So this pair, I talked about this pair yesterday, and basically I said to you guys, keep your eyes on this steep upside line drawn from the low of the 3rd of February. And given that yesterday we had a nice little correction here to the downside, I said to you, keep your eye, in order to go for some higher levels, first of all, the upside line needs to remain intact, which it did, and then we would need to see a push above the 1.0776 territory right here. This way the pair would confirm a forthcoming high, and this is what it did. So now basically, let's see if the daily candle can stay above this hurdle today. If it can, then of course it increases the chances for this pair to move back towards the January high, which is around the 1.0843. But if it drifts back below this but remains above the upside line, I'll take a bit of a cautiously bullish approach, because for me to consider the downside, I would need to see a drop below the 1.0718 zone. At the same time, the rate would already break the upside line, and then yep, more sellers could join in here. Now jumping into USDJPY very quickly. So this pair, it's an interesting one as well, because we are basically, we've managed to hit the level here, the highest point of October of last year, near the 106.11. Previously, if you remember, I've mentioned this idea where if this area here, the 104.40 territory, provides good support together with all these EMAs and this upside line, then yep, we could see a nice recovery here and a push back towards the 200-day EMA near the 105.35 zone. But as you can see, it even overshot that level. So, well, I mean, we managed to reach this hurdle. So currently we're seeing a hold up near this highest point of October of 2020. Now the big question here is, can we move further north? Well, of course we can. There is a good, I mean, we could see that happening. However, of course, keep your eyes on the equity world as well. If the equities start sliding, then maybe we'll see an increase in the yen buying. So maybe something like a slight correction back down here could be possible again. So keep that in mind. If, of course, we continue to push higher and above this 106.11, then yep, my next target is this 107.05 territory, marked by the highest point of August of last year. GBP USD. So yesterday, if you remember, I talked about this candle here to keep an eye for you to keep an eye on it, because what I was saying that it might form a possible kind of doji here, which it did. So does that mean we'll have ourselves a nice reversal? It seems there is a chance for that, because again, looking at this picture here overall, from around the end of September here, it has been trading above this upside line, and to be honest, it was always kind of trading near this upside line. However, after a recent rally here that we saw from the beginning of February, the pair did kind of move itself further away from this upside line, and of course we could start drawing some other ones here, some other tentative ones, but what I'm going to do here is I'm going to stick to the 21-day EMA instead, because we can see that the 21-day EMA does kind of act as some sort of a magnet here. So each time when the pair drifts, let's say, further away from the from this 21-day EMA, and let me just grab a tool here. Where is that, guys? I'm trying to find the distance, measure the distance. I think it's this one here, price range. There we go. So each time when it drifted kind of further away from that 21-day EMA, it kind of it was around the around 300 pip move here, if I'm not mistaken. Is that correct? Yep, roughly around 300 pip here. So let me just try to check these other ones. So similar story here, also around 300 pip move from the last touch here to the 21-day EMA. We also had a roughly already a 300 pip move here. So basically, in a way, we can say that every single time it kind of moves to a maximum of 300 pip. Well, at least historically here for now, it moved to a 300 pip kind of distance here away from this 21-day EMA, and then kind of reversed back down. I'm not saying that this is going to for sure reverse to the downside right now, but again, if we're doing technical analysis here, we're evaluating and kind of analyzing historic price movements, so, and we always try to find some sort of a pattern. So basically that's the little pattern that I'm kind of keeping in mind right now. So let me, there we go. So again, like I said, I'll keep that in mind. Like I said, from the last touch of the 21-day EMA, we have already done that those 300 pips. So again, like I said, let's see if we can move back towards this 21-day EMA. And finally, EURUSD. So drifting lower, trading below this 1.2109 area. I talked about this, and then now the big question here is, can we see a drop below this 1.2059 territory? So that's going to be a tricky one, and if we do get that drop, then of course, yes, lower levels could be met. My next target will be the lowest point, the current lowest point of February, near the 1.1952 territory, and then we'll take it from there. I'm not rushing into anything because again, I want to see that break first. If we do get that break above the 1.2156 territory right here, then yes, higher levels could be met, guys. So okay, I mean, I hope you enjoyed it, Klaus. I mean, this trick, I mean, I hope you're referring to, well, actually, I'm not quite sure which trick are you referring to, because I have mentioned several tricks. So, but yeah, I hope you found it useful. So yeah, everybody, guys, I mean, I hope you found this video useful. Thank you very much for joining in and watching this till the end. If you want to catch my video later on, my trader's tea time, as always, that's 13:30. Well, not as always, but recently has been changed, but 13:30 GMT time, guys. So yep, have a wonderful trading day. Stay safe, guys. I'll see you later. Klaus, GBP, yeah. Sure, that's sometimes, again, you don't focus really too much on that, Klaus, because again, it sometimes works, it sometimes doesn't. So you always constantly have to adjust to the different kind of economic situations, to economic different times. So it sometimes works, sometimes doesn't. So that's why it's just kind of an idea that kind of I throw out there. So yeah, but you'll be the judge. You'll be the judge, guys. So once again, thank you very much, everyone, and I'll see you later. Thank you very much. Bye bye.